everyone, and welcome to another episode of our lessons on or our lectures on mindset, psychology, and emotional regulations. How our emotions affect our trading, how our mind affects our trading, and how it is not often this trading strategy that we bring into performance, into the moment of performance, but it is the mind or the person behind the strategy that at times has a problem. So a lot of us out there, what we are doing is that we are looking for the golden strategy or maybe the golden indicator out there somewhere in the market. But what we don't realize is that that golden strategy, that golden indicator, that how do we call it, that holy grail is within you, the trader. All right. So stop looking out of yourself for something that is within you. So, my friends, if this is your first time watching us, if this is your first time coming across our content, please make sure to like, make sure to subscribe, and make sure to hit that notification button so that anytime we post any comment, anytime we drop any lectures, you're going to be one of the first people to get notified about this. So, one of the most important thing that I would like you to do is that don't just listen to me talk, but also make sure to put theory into practical. So after listening to me uh, for a while, or after listening to me for maybe an hour, don't just be that person who listens, but be that person who puts in the practice as well. And if you're new to trading or if you have been trading, then we recommend you using the best broker in the world, which is Xness. The link is in the description, and there is also a link in the description for you to join our Telegram channel. There is a link also for you to contact us personally if you have any questions or any problems. And also, my friends, make sure to share, make sure to like, because you liking is going to give the algorithm of YouTube the go ahead to recommend this video to a lot of people out there who need this information as well. So today we are going to be talking about the demon of overconfidence in our trading and how overconfidence affects our trading. So have you ever been in that situation, or have you ever experienced a moment in your life when you felt like nothing could just go wrong, like everything will just be moving on smoothly, and whatever you do, you're at the top of the world, and it feels like when whatever you do works out, uh whatever endeavor you pick up works out perfectly for you. So at these peak moments in our life, we tend to gain a lot of confidence. So after we have tried something for a couple of times, or maybe after learning a new thing, picking up a little bit of concepts about that thing, it is very easy for us to, or it is very normal for us to get confident, right? To have confidence. But now it becomes a problem when we let that confidence become overconfidence. In that way, you begin to overlook a lot of things, all right? So overconfidence is one of the demon that is going to kill, or one of the demon that kills our trading performance. And if you cannot kill, or if you cannot manage your confidence level in the market, there is always going to be problem with your trading performance. And when you have problems with your trading performance, when you have problems with the process that you bring into the moment of performance, then it is going to be represented or displayed by your results. So we have to recognize it. We have to recognize what overconfidence is, what is causing it. Then we have to control it and we need to conquer it. If not, you are going to find yourself repeating the same mistakes again, over and over, again and again in the market, and you're wondering what the problem is. So, overconfidence is actually an emotion, and emotions are part and parcel of every human being. So, every human being that we see out there is an emotional being. So cannot at any point in time deal without or perform smoothly without our emotions. All right. So emotions are part and parcel of every human being, but left unchecked in the trading environment or in daily life as well, it is going to bring a lot of problems in our performance. So overconfidence unchecked in trading or confidence unchecked. So overconfidence is just a form of unchecked confidence, all right? And underconfidence, on the other hand, is just a form of unchecked confidence as well. So when we let confidence get to a certain level, then it becomes overconfidence, right? So we need to always be aware of what is causing it, right? And where is overconfidence coming from? Now, overconfidence in trading is going to arise most especially when when you just get into trading, right? So when you just get into trading, you begin to gain a lot of information. There is literally a lot of information on trading that you can find out there. So there is information left and right pouring in. So you begin to gain this information, and this information that you're gaining, it can easily lead you to become so confident in yourself. And so you hear a lot of people talk about trading, and they could broadcast trading for you, right? But when it comes to the real game of trading itself, they find themselves lacking when it comes to that. So as a beginner, it is very, very easy for you to get into overconfidence, especially when you see the possibility of making money. So you're so confident when you have known how to draw support resistance, when you have known how to draw trend lines. All right. So overconfidence in trading as well could come in after you have won a series of trades. So you go into a winning streak, you place certain bets, you place your trades, and you've been having this winning streak for a whole week or maybe a whole month, and now you feel like you're the king of the market. You feel like you can never be wrong. And these are just natural feelings that will arise in every human being, right? But now, when we arise or when these feelings arise in us, left unchecked, begins to sabotage our trading or our daily lives. So you have a series of win, or maybe you're out there chasing the babes, right? And every girl you hit on is yes, every girl you hit on is yes. And so you have that so much confidence. And one day when you hit on some other girl and that girl says no, it is going to be a big blow to your confidence, all right? And you're going to be very, very surprised, all right? So overconfidence in trading could show up as well after a winning streak, when you begin to feel like you're invincible in the market. Overconfidence as well could come as a result of you knowing too much, all right? So when you know too much, it begins to feel like you're now at the top. And when you are at the top, it means everybody else is below you. And the tendency is that when people are at the top, they begin to raise their soldiers, right? When you begin to do that, that is overconfidence, which could as well lead to arrogance. Now, those are some of the common ways in which, or ways, those are the common ways in which overconfidence could show up in trading, right? And it is dangerous because it is a silent killer to your account. By you becoming too confident after a winning streak, there is a possibility that you could begin to underlook what process you brought in. By process, I mean your risk management, your execution, your timing, and all of those things. Since you feel like when I put on a trade, it is still going to be a winner. And so it could easily lead to blown accounts when you are too confident in yourself. So overconfidence as well could turn small wins into big losses. All right. So that moment when you put on a trade and the trade is going in your direction, and you are so much confident because maybe you had a guru somewhere, or maybe your own analysis, you're so confident in your analysis that instead of taking a loss, you let your trades, right? You let small wins tend to big losses, and you let big losses tend to bigger losses, and also you turn small wins into big losses because you were so convinced that your trade is never going to go against you and you're going to be a winner no matter what. All right. So some people say they are now the king of the market. So we had this experience once in the community when somebody came into the community, and that guy was able to take the sum of, I think it was $50 to about 4,800 or 4,700 and something US dollar. And he came to the group and showed everybody, and everybody says, oh, if you can take this your account to $500, we are going to crown you the king of gold. And when the king of gold increased the lot size on his account, and that is how he turned 4,700 something US dollar to $0, because he was so confident in himself, and he wanted the title king of gold. All right. So the market has given you that much money, but because of arrogance and overconfidence, you give it back to the market. So is the problem really with the market, or it is with the trader? This is a question that I always like to ask, and this question can be answered by each and every one of you. All right. So when traders believe that they cannot win, that is the success bias. When you feel as if you cannot lose in the market, all right, there is a tendency for you to start increasing your lot size, to start risking more, right? Because you feel like you cannot lose in the market. So even if you take five winning trades in a row, there is no guarantee that the seed one that you are going to take is still going to be a winning trade. And so you could go in all in on that sixth trade and you lose everything, all right? So when you have these bias that you cannot lose in the market, there is a big problem, right? So the this is what happens to most traders. You get into trading and they begin to see success at the beginning because they are following the rules, they are playing by the rules of the game. But at the end of the day, as winning begins to come in, winning begins to bring in its own problems, right? So in trading could be one of the most complicated uh, professions out there, because winning is a problem and losing as well is a problem. So because you have been winning and winning and winning, now you have the feeling that you can win forever. And this is a big problem, all right? Because trading is a game of probability, and there is never any point in time when you're 100% guaranteed that you putting on a trade or placing a trade is going to result in a winning trade. So even if you have 100 winning trades in a row, there is no guarantee that the 101 trade is going to be a winning trade. And so most traders, when they get into a winning streak, it is very easy for you to get to lose everything in one trade, because we start to go all in, ignoring risk management, ignoring our trading plan, and all of those things. So this is the illusion that the mind usually brings to us, because now we are losing, we feel as if we are in control. And so this is the illusion of control that the mind always has. And the mind is always trying to bring into our daily life and into our reality and into everything that we do. All right. So last time, or if you have not gone through the video on or the lecture on the mind versus uncertainty and how it affects our trading, then you can go and then you look at that. So trading is a profession that is uncertain at any point in time. So putting on a trade, you don't know if that trade is going to be a winning trade or it is going to be a losing trade. And so once you think you have control over trading, that is when the trading mind has already deserted you. That is when you have already set up yourself for failure. So once you have this illusion that you are in control and you can never lose in the market, this is when you are setting up yourself for the biggest losses in your career or in your history as a trader. All right. So also there is something that we call the Dunning-Kruger effect, and we already explained some of the concepts in the beginning. When you get into trading and you begin to grasp a little bit of knowledge, once you grab that knowledge, it is very, very easy for you to go around telling people how you've learned trading, how you're going to become a very rich person very soon. And you can now talk trading, right? But now, when you get to the middle stage, when you get to the next stage of trading, when you have had a couple of losses, now it dawns on you that you still have a lot to learn, right? So you still have a lot to learn, and you get into a state of, maybe I can say, maybe confusion, right? You don't know if you to move ahead or you should go back behind, all right? And at one point, if you push through that confusion, that stage, then you get to a part where you are now a master. You know that trading is an easy way, or let's say a difficult way to make easy money. All right. So now you have attained some level of mastery. So, my friends, these are some of the effects that the mind begins to bring up due to overconfidence, right? And also, there is something which we call confirmation bias, which shows up a lot in trading. So you already think that the market is going to sell, all right? You think the market is going to sell. You got up today and you got an analysis or a signal from a mentor or from a big channel telling you that the market is going to sell today. So at the back of your mind, you have already confirmed that the market is going to sell today. But you sit in front of your chart, and in the dynamic world of trading, the market shifts. Maybe the market was, first of all, showing signs that it was going to sell, but now the bias has shifted, dynamics have shifted, and the market is telling you that it is going to buy. But because you already had a preconceived idea of what the market was going to do, Now you will find yourself selling the market, not because the market is going to sell or because that is what the market is telling you or showing you at the moment, but because your mind is creating this confirmation bias of the first ideas that you first had in your mind. So a very common example is when you see the market is buying and buying and buying, and something is only telling you behind your mind that the market is going to sell. And in as much as the market is buying, you're selling. The market is buying, you're selling. You're only trying to sell, right? And the market is selling, you're trying to buy. So why do you think that trends can sustain themselves for a long period of time? If you think trading is all about mastering technical analysis, then you're very wrong. Ask yourself again, why is it that in the world of trading, where we have about millions of traders out there, why is it that just about 95% of people make money in the market consistently? Is it that technical analysis is not enough, or is it that there is something else? So, why do you think that a trend in motion will continue to move in that direction, knowing fully well that for every buyer in the market, there must be a seller, and for every seller in the market, there must be a buyer? Okay, as the market continues to buy, people's mind, people's biases begin to come in, and they begin to tell them that no, this market is going to sell, this market is going to sell. No matter how much the market buys, they continue to sell. All right. So that is why trends can sustain themselves for a longer period of time. It is not usually because the strategy has a problem, but it is because the mind that we are bringing into the moment of performance, we have not yet crafted that mind to be able to function in the new environment called trading. All right. So, a lot of the things that the mind is going to be doing, or the things that the mind does, were things that were meant to help us in the ancient days. But now reality has moved ahead, but the mind has not yet uh, caught up to reality. So now, as a trader, you must be able to bring the mind from the ancient days back to the present moment so that it is able to function in the recent environment. There are no threats trying to kill you, but the mind will see you placing that trade as a threat to your entire existence. So you see where the big problem is. It is not always in the strategy, but it is in the mind that is executing the strategy. Dopamine rush after you have won a trade. This is just what we're explaining. After a series of winning trades, now you are so pumped up. You want to flip your $10 to 1 million US dollar. And now you increase your lot size. You were able to grow your $10 to $100. Now, instead of maintaining consistency with your lot size and your leveraging, you increase your leverage to unlimited. So for us in Africa, and if you're trading with Xness, you can use an unlimited leverage. All right. So you could bring in your 10,000, your $10, and Xness is going to multiply it to unlimited, right? And so you open bigger position sizes in the market. Now, leverage can be good, as well as it can be very bad to our trading. Same as lot sizing. So after a series of winning trades, now you continue to increase your lot size and increase your lot size, and you end up blowing your account. That is a very common phenomenon that we find in trading or in traders daily. You build your account throughout the year, and at the end of the year you blow your account, or you make money throughout the week, and during the weekend you lose everything. That is the problem with most of us traders. All right. So most accounts that you see blown out there are going to be blown after a series of winning trades. Overconfidence is not a skill, all right? So when they call you, so in our normal, in our local parlance, we call a python mboma. And so if they call you mboma, it means that you're somebody who is so courageous, right? So courage should not mean that you you sideline uh, reasoning, all right? Courage or confidence does not mean that you sideline rational thinking. And so overconfidence in trading is not a skill, all right? But if you can bring yourself or bring the mind to develop a mind that is not too confident and not overconfident, then you have bridged the gap. All right. So before overconfidence shows up in your trading, all right, or before overconfidence blows your account or causes you to lose your account, there are always signs that you can see, all right? So there is always a sign. If you go to the hospital and you want to consult, maybe you have malaria. So malaria is very common in Africa. And so if you go to the hospital and you want to consult for malaria, they are going to ask you for the signs, right? Oh, I have a fever, I have a headache, I have maybe joint pains and all of these signs that malaria is going to bring. And so from these signs, they are going to discern what your problem is. So if you don't know, if you have been oversizing your positions, ignoring stop losses, trading too often, believing that the market can go against you, revenge trading disguised as confidence, then, my friend, you have been acting under the umbrella of overconfidence. All right. So if you have ever experienced any of these in your trading, let me know in the comment section and let me know how it ended up with your trading account. So just let me know in the comment section if you oversized, increasing your positions left and right, including increasing your lot sizes left and right, then you are beginning to get overconfident. If you're trading ignoring stop losses, then you're over getting too confident in yourself. And the market environment is an environment which likes to humble confidence. All right. So there is a lot of humility when it comes to trading. If you're not a humble trader, it is very easy for the market to humble you. So whenever you're ignoring your stop loss because you feel like you cannot lose in the market or the market cannot go against you, then this is a sign that you are getting too overconfident. All right. And also, you trade too often. So every time you're in the market, this is a sign of overconfidence. Now, most of the money that is made in trading, most of the money that is made in trading is not made by you trading. It is made by you avoiding the market most of the time and hitting that buy or sell button when the time is right. So you over trading, anytime that you put on a trade in the market, you have exposed yourself to risks. And so imagine you placing 100 trades per day. It is like you standing in front of a bull 100 times and expecting that you're going to live long. The truth is that you're going to die very young if you expose yourself to a bull all the time. All right. So, once you believe that the market cannot go against you, like feel like you have control over the market, now you're the king of the market could never go against you. This is another sign that you are becoming too confident, right? And when you become too confident, you begin to aim but shoot at the wrong directions. All right. So it is good to be confident, but once it becomes overconfidence, when there is too much of it, you begin to aim for your targets but shoot to the wrong directions. Revenge trading disguised as confidence. So when you take that stop loss hit and you cannot just bring the mind to settle on that loss, you begin to throw back money into the market trying to get back what you have lost. All right, that is a sign of overconfidence. So at times you could get into the market and make back that money, but most of the time when you're trading because you're trying to get back the money, you're already so emotionally attached to the outcome. And if you're emotionally attached to your outcome, then your emotions are going to be guiding your trading. And if your emotions are guiding your trading, you're going to trade out of impulse. And when you trade out of impulse, most often your decisions are not going to be the best. All right. And when overconfidence steps into your trading, normally there is always a consequence for everything. So for every action, there is a reaction, right? So for every cause, there is an effect. So there is nothing that you see out there that does not have a cause, and there is no effect that you see out there that does not have a cause, and there is not no cause out there without an effect. And so if I throw a stone into water, I am causing a vibration in water, right? So what is the cause? The cause is me throwing the stone into water, and the effect is going to be the vibration. And so when you become so overconfident and the market humbles your confidence, the next thing is that you're going to get very emotional. And when you get emotional, you're going to get frustrated and you begin to live in a state of denial. All right. Most people, the reason why they are getting back into the market to get back their money is because they are in the point of denial. Oh, I can't lose. I can't be losing. It's not me today. I've been winning. I cannot just lose. All right. So these are some of the things that guide our trading. These are things that guide our trading, not some of the things. And they are not to be found in the charts, they are not to be found on your charts. They are things that are inherent within you. So for every action, there is a reaction. And so if you're bringing in positive actions, you're most likely going to get positive reactions. All right. So it is just like the mind. The mind is our source of creation. And as our source of creation, it is like a fertile land. And on this fertile land, anything that we plant on it, all right, we are going to have the same produce, the same result. So some people will say, as you sow, so shall you reap, right? So these are some of the common sayings. So if I plant good seeds, good thoughts in my mind, then I reap good rewards. Same as if I plant good seeds on my piece of land, I am going to have good harvest. But if I plant bad seeds, then I am not going to have good results. All right. So once you're overconfident, you become emotional. All right. And emotions are not things that help us in our trading, even though they help us in our day-to-day lives as human beings. But when we bring them into trading, it is easy for them to sabotage our trading if left on control. All right, so overconfidence is an emotion, and if you're not able to catch this emotion, to recognize what it is and to deal with it amicably, it is always going to be ruling over your trading performance and your trading mind. So, once you have overconfidence, which is having a toll on your emotions, and you're trading out of emotions, you're trading out of impulse, you're trading because you want to get back money that you lost, then it is going to have an effect on your financial balance, on your account balance. It is going to lead to blown accounts, losing streaks, a lot of it. All right. So, the psychological effect as well. Imagine yourself somebody who was so confident. So there are a lot of people who after losing for a period of time, they totally lose confidence in their self. All right. So you see somebody who was a confident and disciplined person, and after a period of time you're looking at that person and you begin to wonder what happened to that person. That person lost confidence in themselves. It could be because they were too confident, and life humbled them, or trading humbled them. And when trading humbles you, especially when you are exposed, right? So I think I usually see some videos online of traders who blew a lot of money on their online or their live sessions. So imagine being that type of trader and what that can do on their confidence. So overconfidence can lead to loss of discipline and loss of trust in your own self. All right. So that is one of the effect that uh, overconfidence has with our mind if we leave it unchecked. So in the long term, it is very easy for us to quit when we get too confident, and as a result of us being too confident, we get humbled by the market or we get humbled by life. So if you look at trading very well, you're going to see that life and trading are two sides of the same coin. And so most of the principles that we apply in trading when it comes to mindset and psychology, right? It can, or it easily blends with life. All right. So when you look at price action as well, you look at how the market at times it is in an uptrend, at times it is consolidating, at times it is in a downtrend. It follows the normal pattern of our day-to-day lives, right? So there are moments in our lives when we are in an uptrend. There are moments in our lives when we are in a downtrend. There are moments in our lives when we are just consolidating, right? Moments when you don't know if you're going up or if you are going down. And there are moments when you feel like you're just going up. There are moments when you just feel like, oh, everything is just crumbling. And if you can learn to follow the trend, then it is going to make life as well easy for you. If you are in an uptrend, enjoy your uptrend. Buy. If you're consolidating, okay, know what to do in a consolidation. Know that a consolidation is just an accumulation setting up for an impulsive wave. So if your life is currently in a consolidation, know that this is the opportunity that life is giving you to gather liquidity, to gather more knowledge, to gather more information, and to build your mindset and to build yourself. All right. And also, don't fight the trend. Don't fight the trend of your life. Don't fight the trend in trading. And trading and life is going to be so easy like you thought it was going to be. All right. So for us to get through overconfidence in trading, we cannot eliminate it. That is a reality. There is no way that we are going to eliminate it because these are part and parcel of us. They are inherent in us. They are in our DNA. And so there is no way that we can get rid of them. But we can train our minds, train ourselves to work with these things, right? And so how do we train the demon of uncertainty, of overconfidence? So I talked a lot about uncertainty in such a way that the uncertainty is just flowing in my mouth right now. So, how can we train the demon of overconfidence in trading? The first thing we could do is by keeping a trading journal. Journal your trades, journal your emotions, how you reacted before, during, and after your trade. So, journaling is just like you writing an autobiography of yourself. And when you come and look at it, like you writing an autobiography of your trading, all right? So when you come and look at it, you know where to improve, where to put more effort, and what to discard at the end of the day. Risks a fixed percentage on your trade, and it is widely agreed uh, approved that we risk just about 1 to 2% of our account sizes per trade. So once you go above this level, then there is a big problem. All right. So if you have a fatter account, you have a big account, don't feel as if you need to be risking more because you have a big account. No, big accounts get blown as well. There are people who have blown away billions in the market. So don't think that having a big account is going to save you and now you could risk uh, all of your account size on one trade. Stay humble after your wins. So, one of the traits that you must develop as a trader is your ability to be humble, right? So, this is very funny because I think the last quote that we had in our Telegram channel talked about humility in trading, right? So, let me just try to scroll that and see what we had on that. So, if you're not a member of our Telegram channel, please make sure to do the link is in the description. It is also in the comment section for you to join our Telegram channel. So here is what we said about humility in trading. Humility is a trader's hidden edge. Ego chases wins, ignores risks, blows accounts, right? And humility accepts mistakes, respects, and adapts. The humble trader lasts, the arrogant trader fades. Stay humble, stay consistent, and you stay profitable. So once you begin to get too arrogant in the market, it is very, very easy for the market to humble you. So humility is a quality that you must build as a trader. So it is not only in trading, but in your daily life. How do I build humility? I must build humility. I must make humility part and parcel of me, and I can easily transition humility into my trading. All right. So most of the traders that you're going to see out there, they are very humble traders. I'm talking about those who understand trading. I'm not talking about content creators. All right. So there are different types of traders that we have out there. We have content creators, we have traders, and we have mentors, we have educators as well, right? There are people who trade, and when you trade, that is when you are going to understand all of these things. Review every loss, all right? So stay humble after wins and make sure that you review every loss. Every loss carries a lesson, and a loss does not mean that you are a bad trader. It just means you fell on the wrong side of probability. So after taking a losing trade, most people begin to feel like, oh, I'm a loser. I'm never going to get this thing. It is a lie. Those are some of the lies that the mind will tell you. And in as much as you tie your word as a human being to your trading performance, then you're always going to feel so bad after taking a loss. All right. So a loss is just part of the game. It's just a small due that you pay to the market, the cost of doing business. All right. So love your losses as much as you love your wins, and it is going to be make it more easier for you when you see those red days. So trade with logic, not with emotions. And it is very, very funny because your emotions usually take over. Before you even think, your emotions have already given the guidelines. All right. So even before you begin to rationalize about taking a decision, your emotions had already done a conclusion on it. And if you don't understand this part of our human evolution, then you are going to be facing troubles in trading, but you don't know why you're facing the same troubles. You told yourself that I'm not going to overtrade, you're overtrading. You told yourself that I am not going to do this, but you're still doing it. All right. So those are those are some of the things that if you don't understand about human emotions, then it is going to be easy. So emotions, for our emotions to trigger, it takes about 0.005 seconds, right, for it to trigger. But for us to rationalize about something, it takes about 0.555 something seconds. All right. So before you even start cognition, before you even start thinking or rationalizing about something, your emotions had already drawn conclusions about it. And probably you have already taken action on that based on emotions. So you must train the mind to be slow, right? To be calm, so that you trade with logic and not with emotions, right? So when you, the learner, learn something, like I mentioned at the beginning of this our lecture, when you learn, it is not sufficient. You are going to get the theory. Once you get the theory, what do you do with the theory? You put it into practice. When you put it into practice now, you can now contextualize it in form of a result. So listening and taking lectures day in, day out will not save us. What is going to save us is the work that we do, the practice that we do after digesting all the theories. All right. So what you need to do is you practice the 2% or the 1% rule. Never risk more than 1 to 2% of your total account size. So these are practical tips that we can use so that we curb overconfidence, all right, in our trading. Risk just 1 to 2% of your total account size, all right. So you can always do the maths. There are a lot of tools out there as well that you can use to calculate your risk percentage. So the next thing is your last trade does not matter. Be it a winning trade or a losing trade, that is in the past, right? So being in the present moment is one of the traits that every trader must learn. Focusing on what is happening in the present moment. If your mind is always dwelling on what is past or what might come in the future, you naturally miss what is happening in the process. And in trading, you don't want to miss what is happening in the present moment. You want to be in the moment. You want to be trading in the moment. You are not sitting in front of your trading decks thinking about your past loss or your past win, or thinking about what you could do if the trade goes in your favor or it goes against you. Focus on what matters, which is the process, doing good analysis, bringing in a good mindset, all right, and executing your strategy to all to with all effort, right? So focus on the process, not on the past or on the future. Question every trade. Does this fit my trading plan? Am I risking within my limit? Can I accept the loss calmly? All right. So when all of these questions are answered, you're going to be trading more calmly. So what I do before I get into a trade is I ask myself, if I find myself being afraid of taking the trade, all right. Yes, everybody experience fear. Everybody experiences uncertainty, but it is not about who experiences it or who does not experience it. It is for a fact that everybody experiences these things. But now the difference is in how we respond to them. If person A responds differently and person B responds in the other way, then you're going to have varied results. All right. So if it is in your trading plan, then it is good. Is what I'm risking within my limits? If I look at my account size and I have $1,000 in my account, how much am I really willing to risk on this trade? It is $100. And I say, okay, I am good risking $100 today. And I ask myself, if I lose $100 today, how is it going to affect my daily life? Is it going to ruin me? Is it going to affect other aspects of my life? If it does not affect other aspects of my life, then good and fine. That is money that I can risk calmly. That is money that I can accept the loss calmly. And in this way, you are not going to find yourself panicking when you take the trade, or find yourself acting out of impulse or acting out of emotions when you finally take that trade. So those are some of the practical ways through which you can learn to curb on or to curb overconfidence in your trading. So let's take for example two traders, trader A and trader B. So trader A takes their account from $1,000 to $5,000 with reckless risks. All right. And now trader A is feeling so confident. And when the demon of overconfidence strike in, what are they going to do? Increasing of lot size, increasing of leverage, taking useless risks up and down. And the result of it is usually often a blown account. So, and so you don't want to be trader A, all right? And the same trader with discipline, all right, taking the right lot size, the right leverage, mm, being able to tame the demon of overconfidence. Now they begin to experience steady growth, all right? And so you are now a happy trader, not that type of trader that you win today and lose tomorrow, or win throughout the week and you lose by weekend. So, my friend, confidence is a necessary skill in trading. You must be confident in your knowledge that you have as a trader. You must be confident in your trading strategy or methodology. You must be confident in yourself, being able to execute your strategy with precision. And you must be confident in your broker that you use. And so, since we have so much confidence in our broker that we use, the link is in the description and the link is also in the comment section. There are videos that are going to guide you on how to create your account, because we know the broker that is behind us. All right. So confidence is a necessary ingredient for every trader out there. But when it becomes overconfidence, it becomes destructive. All right. So the demon of overconfidence hides after wins. All right. Not losses. All right. And when overconfidence takes away, or when overconfidence takes over your mind, there is this tendency for you to over risk in trading, or for you to feel invincible. And it is that feeling of invincibility that usually leads people in life to a lot of trouble. And in trading, it is going to lead you to blown accounts. All right. So, survival in trading is what is going to lead you to consistent profitability in the subsequent run. All right. So, if you cannot survive long in the market, you blow your account all the times, then you are not going to last long in the market. All right. So if you have your $500,000 that you have for trading, make sure that you don't blow your account. Your trading capital is the lifeblood of your business of trading. And if you lose all your money, where do you get money to trade from? And so if you don't take care of overconfidence, overconfidence is going to take care of your account. And usually it will not take care of your account in the right way. If occasionally it does take care of the account in in the right way, know that subsequently it is very detrimental to your entire trading journey. So humility in trading protects your capital. Be humble enough to accept losses, humble enough to accept wins. All right. Humility in win and humility in loss. Humility in your wins, humility in your losses. Humility in your losses, humility in your wins. So after being a winner, you need to be humble. After being a loser, you need to be humble. Or after being a loser, you need to be humble. After being a winner, you need to be humble. So no matter how high you grow, no matter how uh, much experience you gain as a trader or in life, the most important thing is be humble. All right. Humility is going to guide your trading, and humility is going to protect your capital, and humility is going to take you a long way in your life. And as usual, discipline in trading will always beat emotions. Now, you must have discipline for you to master your emotions. So naturally, the emotions are there, but what we need to build is the discipline to master our emotions. Naturally, you're going to find emotions popping up all the time, but now you need to build, we need to build the discipline to work with our emotions rather than them working against us. So in trading, patience is a virtue and it is going to pay more dividends than pride. So don't feel like, oh, I had a winning trade today. I've been winning and I'm now on top of the world. And you start getting arrogant and you letting all that pride get the best of you. Stay humble and stay courageous, stay disciplined, and your trading journey is going to last for a longer period. But if your trading journey is full of impatience, pride, arrogance, and all of the other things, then it is not going to be a long journey for you. It is going to be a short lived journey. All right. So remember, the market is a good avenue to teach people patience and to humble people's expectations and all whatnot. Right. So in trading, your patience is going to be one of, or if not the top asset that you need in your trading arsenal. And so, my friends, this brings us to the end of this our lecture series. And if you have watched this series to the end, then please, it is but normal that you enjoyed it and you have taken away something from it. And it is best that you share. As you receive, you give. So giving is one of, or is a form of receiving. So the more you give, the more you receive. By liking this video, you're recommending this video to the YouTube algorithm so that it recommends it to other traders who are looking for ways to tame themselves in trading or to achieve profitability. All right. So recommend this video to them, and by giving, you're going to be receiving more. If you're not subscribed to the channel yet, make sure to hit that subscribe button and also make sure to hit that notification button so that you don't miss out on anything when we drop any content. All right. So if you want to contact the community, we are always available. Our Telegram channel is Easy Forex 007. And if you see any other Easy Forex, it is not us. We are Easy Forex 007. So it is still a small community, but I was surprised to see that some people are already cloning the community. So please, this is the Telegram link, Easy Forex 007, and also there is a WhatsApp number which is currently displayed on your screen. You can get to us through normal calls, or you can get to us through our WhatsApp, and we'll be glad to help you out with anything that you need help with. So don't forget to join the Easy Forex community for daily insights and for growth. All right. So let us grow as a community, and when we grow together, we are going to enjoy the process as a whole. So no matter how much money you are able to take away from the forex market, there is always going to be an abundance of money in the market. All right. So share the content and let us take away more money out of the market. So I wish you all the best in your trading journey. May the universe continue to guide, bless, protect, and provide for you each and every step of the way. God bless you all and have a great rest of your time. Bye bye.